I'm still here with Rele Adesina, the head of research at Stanbic IBTC, and now we're looking closer into our banking sector. Of course, we know today didn't perform so well, it actually remained flat, but traders say it will drive performance on the market. So, Rele, are you still with me?
I am indeed.
Well, let's talk about a recent CBN directive. Actually, the CBN released a directive saying that banks will be no longer permitted to deploy capital from Nigeria to recapitalize offshore subsidiaries. Now, we do know banks in Nigeria, such as Access and UBA, do have a strong presence abroad. So how do you think this directive will affect the growth of the banking sector, especially now that we're expecting Q2 results to come out?
Well, I think this is an interesting development, and I actually think it's a good one on the part of the CBN. Access and UBA specifically, I think that the reference is particularly to Zambia. Now, the Zambian Central Bank has said that they require foreign banks, all foreign banks in Zambia, to raise their shareholders' funds to $100 million by the end of this year. And I believe that for domestic banks, it's $20 million. Now, this is a very significant development in terms of, the size of the Zambian economy, in terms of the balance sheet of the banking sector. It will be a significant increase in capitalization. And the risk is that we end up seeing the kinds of excesses that were seen in the Nigerian sector after recapitalization. Now, for both UBA and for Zambia, these are very, very, very small operations. So if they are to deploy up to $100 million of capital, obviously they have some there now, so an increment to take them to 100, that's a significant amount of capital they are taking out of Nigeria, for instance, where they make most of their profits, to recapitalize a very, very small subsidiary. Now, the point is that if it is viable, if Zambia is viable on a standalone basis for both of those banks, then they can either raise money in the local market, or they can maybe merge their operations with other players in the Zambian market to reach the required minimums. And if it's not viable, if they cannot feasibly generate a return on $100 million, then perhaps it's a prompting to reconsider the medium to long-term prospects of their operations there.
Well, really, I'm really curious about the effect this is going to have on our banks here at home. I mean, we're expecting Q2 results. Do you think that we're going to see any major changes to their bottom lines because of this directive by the CBN?
Not at all. I don't think this is a relevant point for Q2 results. I think that, well, for starters, I think that there are many that disagree with the directive that the Zambian Central Bank has taken, and I don't think it's been ruled out completely that they don't reverse it or maybe extend the timeline or adjust the amount that they're requiring. I think that, since that they are not able to export capital, the Nigerian business will not be affected by this decision. So I really think that it's really not going to have any impact on Q2 numbers. I think year on year, our expectation is for the larger banks on a year on year basis to do far better in half 112 versus half 111, largely because we're in a higher interest rate environment, and these banks have very strong liquidity positions. They have excess liquidity. They have relatively cheap funding costs, between say 2 and 3.5%, and they can put that excess liquidity into far higher yielding bills than they were able to do a year ago. So we expect this to underpin a stronger performance from larger Nigerian banks, certainly both UBA and Access, in the first half vis-a-vis 2011. So I really don't think that this directive will negatively impact.
Well, thank you so much, Rele. Unfortunately, we're going to have to end it there. Thank you so much for giving us a picture of how our banking sector is performing. That was Rele Adesina, head of research at Stanbic IBTC.